And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And welcome to the show this morning. Of course, it is Tuesday, meaning John Penn joins me this morning to talk a little bit about, common questions that we get. And we like to do some case studies with you on Tuesday because, hopefully there are some of the things that you're also dealing with. We get lots of questions, lots of emails from people every week. And, we try to answer them all and help people with their financial situations. So we enjoy sharing some of those with you because, again, these are things that a lot of people run into, and hopefully you'll find that informative and helpful. Before we get there, though, a few things to go through. Interestingly enough, yesterday, durable goods orders had a huge rise in durable goods, and it was like, wow, take a look at that. And again, headline number of durable goods orders, big jump. Of course, once you strip out aircraft orders, it was actually negative. So it really, what average people, now John just ordered a new airplane, but other than him, for most people, we don't buy airplanes on a monthly basis. So again, a lot of that was Boeing, plane orders, et cetera, which often, and those are things are really, not a great indicator. Because plane orders are regularly canceled. I call up Brent. Brent works for Boeing. I say, hey, Brent, I need 12 747s or whatever. And then these things take years to build. They take a very long time to build these things and fill these orders. So between now and then, I call him back and say, I don't really need 12. I need like 4. So, but again, this is all about the data revisions, as we have seen with employment data and everything else. We don't really care about the revisions in the markets. All we care about is the headline number. So again, but again, the market doesn't really look at durable goods. They look at durable goods ex transportation, which really was not a great number yesterday. And it's also why yields fell a little bit yesterday, because the economy is still showing signs of declining. But speaking of Boeing, of course, they just have had one problem after another, whether it was the Max, where engines were falling off, then they had doors falling off of planes, and now they have the Boeing Starliner, where they sent astronauts into space to the ISS. They were only supposed to be there for 9 days. They've been stuck up there for 3 months now, I think we're going on. They've been stuck up there. Then they can't get home because there's problems with the Boeing Starliner. Well, NASA has now tapped Elon Musk and SpaceX to go rescue the astronauts. Unfortunately, it will take another 6 months for the window to open to get a ship up there. So these poor guys are going to be trapped up there for 9 months, roughly. Explain that to your wife. I'm just going up for 9 days. I'll be back in 9 days. Just keep dinner warm for me.
You need to send a space capsule up there full of brisket and ribs.
Exactly.
Give them something to eat on up there while they're up there. Oh.
Do something.
Man.
So we're going to have a little bit longer discussion on the Before the Bell this morning, because I want to go through some things that have occurred over the last few weeks. Again, this will be a little bit longer, but here's what you need to know before the bell this morning. 3 weeks ago, we were talking about the markets and that we were, getting, fairly oversold. And this was the whole yen carry trade kind of blow up thing, right? And so what we saw in the market was and Brent, you can bring the first chart up. This is analysis that we put into our weekly newsletter every week. So if you download the Bull Bear Report on Saturday, or if you subscribe at our website, we'll email it to you. But this is some of the analysis that we produce every week, and it's a very good it helps slow the data down so that you get a better perception about what's going on with the markets. But you'll see that 3 weeks ago, energy, financials, industrials, technology, discretionary, small cap, mid cap, international, emerging markets, all very oversold. And defensive sectors were overbought. So that was because of that very sharp drop in interest rates. All the defensive sectors moved up, and everything else got really kind of crushed. And of course, it was primarily the technology stocks, communications, discretionary, small cap, mid cap that were very exposed to that carry trade, because those are kind of the growth markets. They move the most, and we'd seen that big surge in mid cap, small caps. So that reversal was not surprising. And one thing that is important is that when we get into the analysis, right, about markets and sectors, this is where, when we start to have a correction, everybody's like, oh my gosh, we're having a correction, and, this is the big one. On our risk range report, which we also produce in the Bull Bear Report every week, has very important information on it. The farthest bar to the right is major moving average crossovers. And these are very long. This is weekly data, so it's long-term in nature. But 3 weeks ago, every sector, except three, were on bullish buy signals. When you have this many sectors on bullish buy signals, corrections are always shallow, because the market has a lot of momentum. You're in a bull market, and so your corrections are not going to be that deep. And if you go back to, say, late 2021, as we were heading into 2022, more and more of those sectors were going from green to red, which was telling you that we were getting ready to have a more protracted decline in the markets, which happened in 2022. But 3 weeks ago, you can see that a lot of sectors were outside of their normal risk ranges for a month. And so you had a lot of very oversold sectors for the month 3 weeks ago. The only thing that was really kind of overbought and out of a sector were bonds, not surprising, because that's where all the money went to during the yen carry trade blowup. Okay, let's fast forward now 3 weeks. And this is as of the close on Friday. So let's go back to the first chart that we went into, which is just showing basically very short-term overbought conditions. Everything is now overbought, including bonds. So in 3 weeks, we went from deeply oversold to deeply overbought. Now, this is very short term, right? Now, mind you, this is just short term data in this analysis. So this can, if we have a small correction this week, as an example, between now and Friday, these will reverse a bit. But right now, everything is extremely overbought, which is suggesting that upside is somewhat limited at the moment until the market gets some breathing room. Now let's go to that risk range report again. This as is of Friday. So here we are 3 weeks later, same report. And what you're going to see is that now everything has changed. We're now back to being very overbought and sectors and markets being well outside of their risk ranges for the month. So, you're looking at industrials, staples, real estate, utilities, very overbought, outside the risk ranges. Gold miners also outside of their risk ranges. And then, of course, bonds also outside of its risk range because they've had such big moves over the last 3 weeks as this kind of rotation has continued and this rally. Now, we'll go back to that chart, but I'm not done yet, Brent. Now, what's important, though, is look at that far right column again. In 3 weeks, we've had 2 more sectors turn bullish. There's only one sector that is bearish on a weekly moving average crossover, which is transportation. Everything else is bullish. You don't have big market corrections when you have every major market and sector virtually on buy signals. You've got to start reversing those to build weakness within the overall market. So corrections, when they come, and they will come, are going to, Brent, go back, I'm not done yet. When they do come, they will be fairly shallow, 5 to 10%. And you should expect that because, again, you have so many sectors that are overbought. Importantly, if you go to those sectors that I have boxed, you'll notice that the deviations from the long-term moving averages are double digits, and particularly that in gold miners, which are now 20% above their long-term moving average. Those types of deviations are unsustainable. So you're going to get a corrective action. We've talked about before about stretching a rubber band. These things are very, very stretched. So you're going to get some corrections in these sectors. Now, what triggers it? Don't know. But likely sooner than later, we'll have a correction. One last thing here before we wrap up this segment is just looking at a very quick chart of the markets. There are several support levels just below where we are that are going to provide support. The first level of corrective support is at the 50-day, the 20-day just below that, and the 100-day just below that. So any correction that we have is likely going to be contained to those levels. But this is kind of the setup as we go for, and again, while we talk about reducing risk, rebalancing portfolios, taking some action here. Markets are very extended here on a lot of different levels. So expect a correction, not tomorrow, right? But over the next couple of weeks, some type of corrective action would not be surprising. But that's what you need to know before the bell this morning. When we come back, we'll pick up with John Penn. Lots of stuff to get into this morning. That article on the website with all the levels, everything on it for you is on the website right now, realinvestmentadvice.com. Be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. You need a blueprint to structure your funds against volatility and turbulence in the market. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint, Saturday, September 14th at the Hyatt Centric in the Woodlands. How to structure your savings, level your risk, and craft a secure future. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com. realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So welcome back to the show this morning. If you missed some of the segments that we just covered, the article is on the website this morning talking about overbought conditions. Now, again, just the takeaway here is that you need a catalyst for the correction, and don't know what that's going to be. And it doesn't mean you'll get one today or next week. Could be today. We have NVIDIA tonight. If for some reason NVIDIA really just kind of, misses earnings, gives poor guidance. I mean, just isn't as rosy as everybody's expecting. That could certainly cause market correction, particularly in the technology side of the market. So, again, there are things that are out there that can certainly roil the market. The dollar's been declining, the yen's been rising. The finance minister in Japan is looking to raise rates. The Fed is looking here to cut rates. That dichotomy between the two could potentially resurface the carry trade issue of 3 weeks ago. We've reduced the margin on the carry trade a lot, but that's still a big trade that goes on, and so those kind of that kind of issue where rates and yen is going up and in the U.S. the rates and the dollar are going down, that suppresses that trade and creates the potential for another set of margin calls. So again, we're not technically out of the woods yet on the whole yen carry trade. So, but my point is that could be it. It could be something else, but it'll be something unexpected that crops up, and we're going to have a correction. And again, 3, 4, 5% correction would not be surprising. So again, we've had a decent rally here from the lows. Markets are back towards all-time highs, and we'll probably set all-time highs before this rally's over. But again, we're going to get some type of correction. Again, you've got the election coming up as well, and given what's going on with the election right now, there's certainly some reasons to want to de-risk ahead of that election. So that could be the issue too in September, October. So again, it doesn't mean a correction is going to happen today or tomorrow, but probably within the next month or two, we're going to have a correction of some sort just to alleviate some of these conditions. Again, it'll be shallow. It won't be the beginning of the next major bear market, but you're just kind of a pullback, which will give you a better opportunity to add exposure where you want to add exposure, pick up some stocks. I mean, just a good example. We sold a position in our dividend equity model, and we're trying to replace because it had such a huge run up. So we're trying to replace it, but every stock that we want to replace it with that's fundamentally strong, has a good dividend, et cetera, we're all extremely overbought. So we're having difficulty finding positions to add to portfolios because of the environment we're in. In our newsletter that we produce every week, we produce stock screens at the bottom of the newsletter. So we have a relative strength screen, a momentum screen, and one screen that's based on fundamentals and technicals. And that one's a really interesting one because when markets are really overbought, that list gets really short because trying to align fundamentals and technicals becomes much more challenging when you have a big move in the market. When markets have a decent correction, that list gets very long, lots of stocks to pick from. Right now, there's not a lot of stocks to choose from on that fundamental technical screen. So that kind of also tells you where we are in the markets right now. But again, just, the whole point here is just realize market cycle and just take do a little risk management, and you'll be fine.
You mean markets don't always go up in a straight line?
They seem like they do.
They do, right?
Yeah, we forget about those little declines, those little hiccups along the way.
I mean, oh my gosh! If things pull back a little bit, that means they're on sale.
Exactly.
What's that? Maybe we can pick up some things at a better value.
You bring up a great point, because psychologically, this is the way investors are. Either every correction is the beginning of the next major bear market, or the market. We forget about the corrections and markets only go up, right? And so when markets are breaking out to all-time highs, we're extremely bad. It's like, I got to get in. I'm missing out. And it's like, just be patient. They go up, they come back, they go up, they come back, and yeah.
I mean, just this morning in your blog, so many great points through there. I love that risk range report, because if you take a step back, you can really take a look at the whole marketplace.
Yeah.
I think, and I think as investors, just as people, we're all just so wired to really kind of focus in on one narrative that we think is going to be true, and based off that one narrative, here's how I'm going to base all of my investment decisions, right? Like as of late, a lot of talk still around yen carry trade. Yen's been strong, dollar's weakening here a little bit, but oh my gosh, is this it? Yeah. Is this going to be the demise of the dollar? We got to get out of treasuries. Oh my gosh, I got to buy all my gold. It's like, well, hold on a second.
Yeah.
Just take a step back. Let's take a step back and see what's really going on out there in the market. Not just the market, but the economy, the interest rate environment, political environment later this year. So I appreciate you focusing on the bigger picture, because I think as investors, I think it's so easy for us to really hone in on one specific narrative, and that's what we use to base all or none decisions on.
Right.
Right.
Right. Well, this is part of that psychological, issue that we discuss all the time, is that we tend to feed our we're looking for confirmation bias. We read an article that somebody says that the world's going to end and the dollar is going to collapse and we're going back to the Stone Age. So now every time the dollar declines a bit, it's like, oh, this is it. And remember, we had this same issue back in October of 2022. The dollar was declining. All the headlines were about de-dollarization. Oh, the world's everybody's moving away from the dollar. This is de-dollarization. It's the end of the dollar as we know it. And then the dollar rallied for 2 years. So again, the dollar is going to ebb and flow with economics. And again, it's about, when you talk about the dollar, remember, you're not talking about this. There's a lot of fallacies about the dollar. Mm-hmm. When you're looking at the dollar, it is the dollar in relation to something else, right? So normally when we talk about the dollar, it's the dollar in relation to a basket of other currencies. So is the dollar getting weaker relative to other currencies, or is it getting stronger relative to other currencies? Or you can look at the dollar in terms of the dollar versus the pound, the dollar versus the yen, the dollar versus the Swiss franc. You can look at it on individual pairs, but it's always the dollar in relation to something else. So if the economy is slowing down in the U.S., the dollar will decline because we have a weaker economy. If the economy is getting stronger in the U.S., the dollar will strengthen because it's in relation to how our dollar reacts relative to other currencies in the world. And this is why it's always very important to remember when you hear these stories about, oh, central banks are buying gold. Well, yeah, they were buying a lot of gold because the dollar was rising and it was offsetting their currency. So they have to sanitize their international trade by either buying treasuries or buying gold. That's how because all that trades in dollars. So I have to store my currency somewhere. If China sells 50 billion in products to the US and then takes all that money back into the yuan's going to become very strong relative to the dollar. So that impairs trade for their economy. So in order to not bring that dollar back or those dollars back into yuan, they can sanitize those trades by buying treasuries or by buying gold. And that's what we've seen a lot of over the last year or so. So again, it's always important to keep, these ebbs and flows of currency in perspective. They don't often mean that the end of the world is coming. It just means that there's economics and trade that are working in the balance of each other.
When I think it's sometimes easy too to listen to certain narratives or see headlines out there in the media, or we pick up on things and then we react and we say, well, oh my gosh, what does this mean for me, or what does this mean for my portfolio or my livelihood? I mean, there was a call with a prospective client I had within the last week, and I was not aware of this, but they had found an article about there were some municipalities in like some states that maybe I'm not as familiar with, Utah, North Dakota. These are municipal districts that may be at risk of not being able to, raise tax revenue and have dollars and have this money, behind the municipalities. And oh my gosh, Sean, what are we going to do? And I took a step back and I said, okay, well, do you own any municipal bonds in those states where you have to be concerned about revenue or raising funds for these? And they said no. I said, well, then this really has no effect on you at all. Right. I said, don't let these headlines, the shock and awe, drive you to do something that really doesn't relate to you or affect you directly, And so I think it's just easy. I think we're all just very wired to kind of let the media react to us. So it's good to be able to take a step back and just take everything into consideration when you're looking at your money, right?
Well, exactly. And this is always, again, all of this that we're talking about are those psychological behaviors that lead us to making bad. Look, and by the way, we all have them. I have them, John has them. We all have psychological behaviors that we have to combat. But that's our job as investors, is that it's very easy to get sucked into a bias or some mentality that leads us to making poor investment decisions over time. And again, our goal is simple. And our goal is just to make money, right? Because we have to grow our savings to offset the purchasing power disparity that occurs over time due to inflation, right? That's our job. That's our only job. Be right back after the break.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. You need a blueprint to structure your funds against volatility and turbulence in the market. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint. Saturday, September 14th at the Hyatt Centric in the Woodlands. How to structure your savings, level your risk, and craft a secure future. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
You have to love Texans, and you have to love Texans back in the 70s because we didn't really know better. You take a big propane tank and you stick it in the back of your truck and make the connection to your car so that you have propane-fueled engines because propane was cheaper than gas.
The Real Investment Show podcast.
Gas was almost $1 a gallon. It was outrageous.
Same show, your schedule.
You were a mobile bomb, but
at realinvestmentadvice.com.
But you didn't have to pay for gas.
Oh, man.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint. Saturday, September 14th at the Hyatt Centric in the Woodlands. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Hey guys, have you got your Blue Chew order? It was interesting, on the break there was a commercial on CNBC for Blue Chew, and it was interesting because, again, if you're not familiar with Blue Chew is a new, so Viagra, which was originally a Pfizer product, has gone generic. So now everybody can basically offer over-the-counter generic knockoffs of Viagra, and Blue Chew is one of those issues. There's a company called Hims that trades publicly, and they provide men's health. They also have hers, right? They have Hims and hers, but they offer hair, hair stuff to make your hair grow, and over-the-counter generic Viagra, etc. And so you can order these products all online, and so Blue Chew is one of the latest products that are coming out to offer Viagra to men, and they have these very sexy women on TikTok and on CNBC, suggesting that you get your order of Blue Chew today so that you can have better performance tonight, right? And they deliver it discreetly right to your door. It's great. It's an interesting story to this. We've talked about demographics here on the show before. And if you take a look at the birth rates of children in America, it is at the lowest level since the Depression. And back in the Depression, nobody wanted to have children because you're in a depression, right? So it's like, I don't want to bring kids into this environment because I can't afford them because I'm in a depression. We are now back to those levels of the birth rates of natural born children in the United States. It's also the problem that women in general are waiting a lot longer to now have children. In fact, the average age of birthing mothers is starting to head up to being over 30 years of age. So they're waiting much longer to have children. Now, this has a big impact economically because demographics are destiny. So birth rates, etc., are a problem. And a lot of this has to do with economics. And it was interesting because this morning on X, Twitter, whatever you want to call it, I posted this chart. Brent, can you bring this chart up? This is a chart of world dating apps. So think about Match, eHarmony, those online dating apps, Tinder, Hookup, all those, Bumble. This is the average users. Look at how sharply in the last 2 years, as you've had inflation, by the way, that there's been a drop-off of monthly active users on these apps. And it's interesting because if you kind of look at the polls and things that are out there, people are not dating, right? They're not going out. And a lot of these dating apps, which were supposed to engender, a dating relationship that leads to marriage, a lot of these have turned into just basically hookup apps, right? But they're not even doing that anymore, right? Remember we used to go to bars and back in the day and
actually see people face to face,
see people,
have a conversation,
buy drinks, try to get a little Blue Chew action going. But that's not even happening anymore. And here's the interesting story behind this. I'm actually writing an article that'll be out on Friday talking about the similarities between the U.S. and Japan. This is one of them. In Japan, they have a birth rate problem like we do now. They have a major demographic problem as we do here. the average, the average age of individuals in Japan is getting extremely old, and they have and the upcoming generation is not there. And a big reason is because there isn't an ability to create an income and a lifestyle to support a relationship. And so people are choosing not to date because they really can't afford to date. And so they live at home with their parents and they don't date. And so they're not creating, and the important part is they're not forming households, which is what you need. Household formation is the driver to the economy. And so you need that. And if you can't do that through natural birth, you need immigration. And so that's kind of the argument of, this flood of immigration is like, oh, we need the immigration. It's great for the economy. Well, not really. You need good immigration. There's good immigration and there's bad immigration. And so you want to immigrate high-skilled workers that bring technology and skill sets to the economy that creates income, creates businesses, hires employees, et cetera. But you have to grow your demographics either through natural birth or through immigration. This is Japan's problem. We are now seeing that in the last 2 years, and it's interesting because really the decline in the natural birth rate in the U.S. has been dropping for the last 2 decades. But it was interesting because of this big drop in the use of dating apps. I mean, people aren't even hooking up anymore, which might, create an offspring here or there. That's not even happening. So this is, and again, why are they not doing that, right? Is it just simply the function is like, I just don't want to date? Or is it because they're not dating because A, they can't afford to, it's too costly to go on a date, right? And, for men, it's too costly to go pay for the date. For women, they're going, well, I don't really want to date that guy because he doesn't have a good job, whatever it is. He's not a good mate, right? And believe it or not, I think women still, I'm not a woman, so I can't speak, but I'm sure if I would ask my wife, and maybe if you asked yours, she would probably say, yeah, the first thing I would look for in a man is like, is he a good potential mate, right? Has he got a steady job? Is he, good looking, whatever. But I think in there is, when there's dating going on, there's at least a consideration of, is this a guy I want to be with, right? Is this a guy that can support me, take care of me, whatever it is? And when you have a high inflation environment with slowing job growth or et cetera, that becomes much more challenging. I think that's reflected in the last 2 years in the use of these dating apps.
I think so too. I mean, I don't think my wife would get too excited if I met her at the local happy hour down at the Applebee's. You know what I mean? That's probably wouldn't be the first great impression that I've now.
It's 2 for 1
now
wings.
Look, we've been married this year. We'll be married for 27 years. So guess what? We'll go to Applebee's for happy hour. But in the beginning, that wasn't the case. You know what I mean? So, you take a step back and you look at what it costs to raise a family. I mean, we have 2 daughters, so we're a family of 4, and you look at what it just costs to put food on the table and just maintain your lifestyle today, let alone and granted, we don't go out to eat much, but when we do, I mean, we see families with 3, 4 children out there, and I know what I'm paying.
Well, it was funny. My wife and I had stopped by a Mexican restaurant the other day. We were moving over the weekend. Yeah. And we stopped by now we have 4 children, mind you. So we raised four kids. But we were sitting at a table by ourselves, just eating some lunch, and we looked over, and there was this lady and her husband, and they had 6 kids, and they were all under the age of about 8. And my wife and I just looked at each other. I was like, poor guy.
I know. It's like when that check's coming.
Exactly.
But you bring up a great point. And I remember when I was in my kind of early 20s, and I was at the gym every day, and there was a gentleman in the locker room one day, and he was quote unquote older. Well, he's probably my age now, or he was probably my age then. Anyway, and I remember striking up a conversation with him. He's like, "Hey, young man, I need you to go out there in the workforce. I need you to contribute because I need you to keep paying my Social Security." And I was like, what are you talking about? I was like, 22, 23 years old. But now looking back, I mean, that resonates a lot with the message that you just said, right? About having that, that younger generation out there contributing and working to the economy to keep things moving forward. Because, I mean, I know we talk a lot about Social Security and the viability of that and the viability of it. And, you need folks that are working and continuing to pay into the system to keep our economy growing, right?
Yeah. Well, and again, in our chat right now, there's some good comments too. There's a lot of expectations, and one of I think one of the important comments made is, and I've got an article coming out, also about talking about social media. One of the problems to society has been the rise of social media, and there are some very distinct points that are occurring with teenage suicide and teenage depression, and all these things, all these rates started to spike dramatically just as Facebook went public. And as we've had more and more of these social media apps, TikToks, et cetera, it keeps getting worse. And the comment is that people just don't measure up to what they see on the internet. And, they see on the internet, everybody's driving fast cars, they live in big houses, and, that's just not real. Mm-mm. And even the people on the internet in a lot of cases aren't real, but we're getting this image in our brains that is what dating and life is supposed to be like, and that's not real life. And this is also potentially feeding into that problem. And another comment is that, and there's been there was a great video the other day of a lady. She's an economist, and her daughter came to her and says, "I'm looking for a guy in finance, 6 foot tall, it's got a six pack, got blue eyes, and makes six figures. That's my ideal." And so she went through she broke down the demographics of men in the nation and said, okay, here's the number of men she can choose from. How many men are 6 feet tall? And she said, okay, there's like 30 million of them. How many of them have blue eyes? That immediately dropped that number down to like 2 million guys. She went through all the demands that her daughter had. At the end of the analysis, you know how many men there were that would fit her profile? In the entire country. Pick a number.
20.
2.
Oh, I overshot that.
2. It was me and Brent. Exactly. But we're already married, so
they're taken, ladies.
but that's, and so I think the comments are valid, which is the expectations that men and women now have for the other sex, or the other person, I should say, because it doesn't really matter anymore. Pick what you want.
Yeah.
But I think, the expectations are now so skewed that it's just becoming so disappointing because nothing is like what I saw on the internet.
Well, like I said, my wife and I, it'll be 27 years this year, and she just kind of looks at me and I'm like, sorry, hon, this is what you got. Sorry, there's no app or AI that's going to make this look any better.
Yeah. My wife and I are right there behind you.
Yeah.
We're at 15, so
that's awesome, man.
We're catching
Congratulations.
up. No,
that's awesome.
The 20-year mark. That's amazing. I ran into somebody yesterday with just had their 25th anniversary, which is absolutely fantastic.
It is.
Brent, how long have you been married? 45. Brent's been married 45 years. He's only 46 years old. I mean, talk about child marriages. I mean, geez.
You started young.
Be right back after the break.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. You need a blueprint to structure your funds against volatility and turbulence in the market. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint. Saturday, September 14th at the Hyatt Centric in the Woodlands. How to structure your savings, level your risk, and craft a secure future. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
I just have to send out some congrats to our chat. Brent mentioned that he was married for 45 years, and in the chat, we've got several. 40 years for me, 40 plus years at the same wife. That's good.
I like that, yeah. With the same wife?
With the same one, yeah, 40 years. That's awesome. Yes, it has to be with the same person, not you've been married at different times with 40 years. But yes, congrats to all of y'all for long-term marriages. It's unfortunately, it's kind of a dying thing these days. So, congratulations to you. That's awesome. I hope my wife and I make it that long, and I will be roughly 90 when I get there. But I'm gonna give it my best shot. I'll give it my best shot.
90 years young, my man.
Exactly. Well, we've pretty much killed. We're actually going to rename this whole show today to Squirrel because I took a hard left, and that I saw a commercial on television, and we completely got off track with that. So I apologize. I promise to get back on track tomorrow with Danny, but
look over there. What? Squirrel?
No, right. So you and your daughter actually got scammed.
She did, yeah. So I was going to say, Houston, we have a scam problem. You know, I'm amazed. So it's happened last week, y'all. So I thought it would be good to bring this up for all of us to be aware of what's going on around us out there. I am amazed at the lengths that people will go to try to get money out of your pocket, right, for a non-legit reason. So last week I was working from home. Our oldest daughter graduated from college last year. She moved back to Houston. She started her first official career about a year ago. She gets home usually around 5:30 or 6 o'clock, and I was in the office wrapping up my last call, and I just heard commotion out in the living room. Our oldest daughter, Audrey, was just beside herself, crying, so upset, talking with my wife, Shauna, about this family that she just encountered. Our daughter was coming home from work, stopped off at the local gas station right down the street at the local Kroger, because that's where we go for our fuel points. We fight over our gas rewards, right? So she's there pumping gas, and she came across a woman in a vehicle with two children. And the woman had her hands over her face, crying into her hands and saying that she was a victim of domestic abuse, domestic violence. And she was on the run from her abusive husband with their children. And she was trying to find or get into a hotel in Houston. It was called the Safe Harbor Hotel, right?
Okay. And
our daughter is beyond upset at home. And she was like, Mom, Dad, can I get out there? And I'm like, what is going on? And she's like, this lady was there with these children. And she was like, Dad, the children didn't have shoes on their feet. When I looked in the vehicle, there was trash everywhere. And our daughter was like, it was apparent that they had been living out of this vehicle when they're on the run. So of course the lady, looks at our daughter and says, hey, I'm trying to get into this Safe Harbor Hotel, but they need a deposit. They needed a deposit for me to get acceptance or to get it, to be able to use the services of this safe space. Is she had a brochure that looked legit. It's like, here was the Houston Safe Harbor Hotel. And oh, by the way, would you mind calling them for me on my behalf? Now, the phone number was not on the pamphlet. She verbally gave our daughter the phone number. Of course, the tender-hearted, want to do right by people daughters that we have. She made the phone call, and somebody on the other end of the line picked up at the hotel and said, we need $143 for them to be admitted, plus an additional $100 to cover their food, taxes, and other expenses. So $243. So in the moment, what did our daughter do? She reached into her heart and thankfully did not give them her credit card. She pulsed out money and gave it to this lady so that way this lady and these two children could go off and be taken care of. And so she is just beside herself. She's like, I can't, she is just absolutely crying her heart out at home. And she starts telling the story to my wife and I. And the moment when she said, hey, the safe space was asking for funds, was asking for a deposit, that's when the red flags started going off. Because, typically, at least, we're very fortunate in our family that we don't deal with domestic violence, but for folks that we've known that have had issues in that area, typically there's a safe space that they can go to and they don't require payment.
They're like, please come.
It's please come. And so the more we started talking about this with our daughter, I was like, this doesn't sound right. And then she basically Googled this. It was like, is there a scam going on in Houston right now with a lady in a vehicle with two children? And it turns out that this scam has been going on all year. And these folks are just, they circle around to various locations in Houston and they are playing the card of domestic violence and, they're taking money from folks. And so our oldest, when she figured this out, her emotions of sadness and empathy quickly turned to anger and rage because she was just so upset that they had taken advantage of her. And it wasn't so much that, they got her money. It was the principle of the matter that they involved young children in this too.
Yeah.
Right.
Well, and the sad thing about this is, look, scams have been going on since the dawn of man, right? I'm sure there was some guy scamming some other guy in a cave for a dinosaur bone at one point. But the bad thing about this is that it's gotten so prevalent now that people that are really out there trying to raise capital for legitimate charitable organizations are having much more difficulty doing it because nobody trusts anybody now. It's like, these email phishing scams and everything else that goes on. Everything you get is, is this real or is it a scam? And so a lot of this stuff just immediately gets deleted when there's actually real legitimate charities out there needing to raise capital. And again, a lot of these safe harbor spaces for whether it's domestic abuse or homelessness or whatever it is, they are solely dependent on charitable donations to operate. And, they're having a tough time raising funds.
They are. And so to that very point, so we were talking a little bit about this and, after the fact, and she figured this out and she confirmed that indeed this was a scam. At the end of the day, I was like, in the moment, you were trying to help others who truly, they truly looked like they were in some pretty dire straits, right? So our oldest reached down into her heart and, gave him some money. But now it's, she's jaded.
Sure.
Because
the next time it might be a real person.
And it might be a real person that needs a helping hand. It's like, I've been burned, right?
That's right.
And it changes how we view this. And there are legit, organizations out there that need funds. They need handouts. They need our charitable donations. And it's things like this that ruin that.
Well, it was interesting. My wife and I were driving the other day, and we're going down Memorial Street here in Houston, and there's a very young woman in the middle of the street on the median, kind of begging for money. She's singing and dancing, and she's praising the Lord, and just asking for help. And my wife and I are looking at her, and you kind of want to help her, right, at first, but then you start noticing, and this is where you start looking, right? Her nails were very professionally done. She had professional nails. She was wearing diamond earrings and, studs in her ears and all these other things. And again, it doesn't, and she was, not, her clothes were pristine, right? It's not like she'd been living on the street for a month, this type of thing. And so immediately you start going, okay, this doesn't really fit the profile of somebody that's homeless. And actually she may have been, I don't know, but those are the things that are going on these days that you really take into account.
Yeah. So, and some great points in the chat here, y'all. Thank y'all. Like James, I'm assuming she didn't grab the license plate number. No, in the moment she didn't. She was so wrapped up in the. They had played this role and they were pulling on her heartstrings, and she was thinking with her emotions at that point, right? And now she knows, if there's if there's a scam or if she's suspicious, Google is her friend real quick, or hey, call mom and dad.
No.
Right? Make a call, and let's just kind of talk this through and see if this is all kind of adding up here. So, hey, Houstonians or anybody that's in the Houston or greater Houston area this morning, this happened at the gas station just outside the Houston Heights area, at the Kroger there off of 11th and Durham or Shepherd right there. And just so they were driving, the lady was in a kind of a mid-size gold-colored SUV. According to the scam, it looks like they have a white vehicle, maybe a blue vehicle, so they change vehicles on a regular basis. So y'all just be on the lookout for that, right?
Sure.
Little public service announcement this morning, just putting it out there.
But again, the scams are a big problem.
Well, they are, and especially as we get a little bit closer to the end of the year here, when we get around the holiday season.
Yep.
And especially for I know in some previous shows, Togetherlands, we were talking a little bit more about, hey, the value that advisors bring and some things that we do that aren't maybe directly portfolio related. I cannot tell you how many times I visit with a client's mom and dad to help them make sure that they are not getting scammed, right? Just
Right.
like elder abuse, right?
That's right.
Big deal.
All right, squirrel.
That's it.
So-
Over there.
I promise tomorrow, back on track. Danny will be here. We'll get back into our lane. We appreciate you being here today. Congratulations to all of y'all that were in the chat today talking about 25, 30, 35, 40, 45 years of marriage. Congrats. That is so awesome. We need a lot more of that going on. And apparently we need a lot more people using dating apps. So there you go. All right, y'all have a great day. Get by the website. The article we discussed this morning is on the website now. All the technical levels are laid out for you, what to look for during the next correction, where the next opportunities might be. All on the website, realinvestmentadvice.com. We'll see you back here tomorrow.